one thing we do know is that both candidates are basically saying innovation solves problems, and we're for innovation. And the biggest proof point for that is the shift to bipartisanship when it comes to crypto policy, digital asset policy.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. As always, Kathy discusses fiscal policy, monetary policy, market signals, economic indicators, and innovation.
You can see inflation has broken down. This is the green line. And for those who haven't been tuning in, the purple line is money supply growth over the last 10 years. And you can see the burst during COVID and the unwinding after COVID. You can see the correlation between money growth and the CPI inflation rate. You can also see that in the last year and a half, until recently, it seemed like the inflation rate was stuck around, somewhere in the 3.5% to 4% range. Recently, it has broken down below that. It's broken into the twos. And if the money growth rate is any indication, it will continue to come down. Now, I realize we're in a moment where there's geopolitical risk involving the Middle East, and oil prices are backing up. So maybe we go through, another moment of uncertainty here. But if we're right on what's going on out there, listening to company earnings, it does look like that companies are now starting to price more aggressively because the consumer is demanding it. And so we're seeing the discounts on autos go up fairly dramatically, and we're hearing the big retailers, Walmart, Costco, Target, all talk about cutting prices. So we think that on balance, the CPI inflation rate will continue to fall. We wouldn't be surprised to see it go into negative territory, much like it did in 2014 and 15, and then again in 20. Certainly the money growth rate is pointing us in that direction.
HBO's documentary aimed at outing Bitcoin's pseudonymous creator, Satoshi Nakamoto, identified Canadian Bitcoin core developer Peter Todd as the cryptocurrency's inventor. Cullen Hoback, producer of HBO's Money Electric, the Bitcoin mystery documentary, confronted Todd and Blockstream founder Adam Back with the evidence he had stitched together to conclude that Todd was Nakamoto. The documentary's finale ends with Todd saying, "Well, yeah, I'm Satoshi Nakamoto," in response to a confrontational question from Hoback. Still, this admission doesn't necessarily prove that Todd is Bitcoin's inventor. He is well known for invoking the phrase, "I am Satoshi," to support the real creator's right to privacy. Todd publicly denied being Bitcoin's creator ahead of the documentary's debut and questioned Hoback's conclusion after clips from the documentary leaked online ahead of its debut. Todd again denied being Satoshi on social media after the release of the documentary. In an October 8 response to a comment on X asking him to come out and deny HBO's claim, Todd wrote, "I am not Satoshi." Todd has joked about being Satoshi in the past. In a 2019 What Bitcoin Did podcast episode, Todd told host Peter McCormack, "I am Satoshi, as is everyone else." During the podcast, told McCormack he made his first Bitcoin purchase when the cryptocurrency was worth around 20 cents. This puts the time of purchase in October 2010, roughly 2 years after Bitcoin's white paper was published on October 31, 2008.
What's interesting about this chart is oil prices, given what's going on in the Middle East, and especially involving Iran, I would have expected the oil price to actually spike here. And it's stopped going down, but it is not spiking. And it does seem like the demand for oil is coming down. The statistics are being revised down. And we do believe that part of that is cyclical economic activity around the world, and also the shift toward electric or hybrid vehicles. So if the geopolitical situation settles down, we would not be surprised to see the oil price continue down in the months ahead. In the next chart, I also like to keep us focused on this chart, which has been a decent guide in a number of ways. So for those of you who haven't gotten the explanation of what this is, the purple line is the metals to gold ratio. And what it's saying here is the metals prices on average are going down relative to the gold price. And you'll notice the gold price has broken out recently. And so we've been forced to ask the question, is the gold price pointing to higher inflation ahead? If it is, metals prices will follow. And here you can see they are not following, at least not to the extent that the gold price has gone up. In fact, they're below where they were, or this metric is below where it was in 08-09, and it's approaching COVID level lows. And what that usually means is a very weak economy. And I do think China is very weak. I think the cyclical part of the global economy is very weak. The green line is the interest rate, very high correlation. Before the Fed started raising rates, as soon as the Fed started raising rates, this correlation broke down. And so what we're trying to figure out here is which of these lines is going to be right longer term, or are they going to meet in the middle and agree to disagree for some time? If the purple line is right, then the economy is much weaker than some of these headline numbers are suggesting, and the interest rate will continue to come down. If the green line is right, then it's basically indicating that the gold price, which has broken out, is pointing the way towards metal prices. So we may see the purple line go up more than the green line goes down, and maybe the green line just stabilizes around here. If we're right about where inflation is going, based on what we showed you early with the money charts, the purple line is probably more correct here. And that suggests that the interest rate should continue to come down. I know after an employment report like we received today, that many people are saying, okay, we're off to the races. The Fed was wrong to cut rates. We don't think so. One thing that we've learned from the last few years is it takes a long time for the economy to react to monetary policy in particular. And monetary policy has been, I would say, what Chairman Powell calls it restrictive. He uses the word restrictive, and he believes it's still restrictive, as do we. So we shall see. I think this chart is a very important indicator.
Holbach's reasoning for claiming Todd as Nakamoto rests on a chat log message Todd wrote claiming to be the world's leading expert on how to sacrifice your bitcoins, adding that he had done one such sacrifice and I did it by hand. Holbach classified this message as an admission that Todd had permanently disabled his ability to access the 1.1 million Bitcoin, worth $69.4 billion, thought to be held by Nakamoto. In the lead-up to Hoback's bombshell reveal on Todd, the Canadian Bitcoin developer provided his own reasoning for why Bitcoin's creator might choose to remain anonymous. What if the real reason for using the name Satoshi was so that people could take Bitcoin seriously? So they could believe it was created by a real cryptographer and not some kid still in school. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.